This is a demonstration of exercise 419, preparing a classified balance sheet and calculating the current ratio. So the problem gives us the adjusted trial balance of Melanie O'Malley Dance Studio Company as of August 31st, 2024. So we have all of our debit and credit balances for all of our accounts, and we are now ready to complete our financial statements. So the requirements state to first prepare the classified balance sheet of Melanie O'Malley Dance Studio Company at August 31st, 2024, and use the report form, and we will have to compute the ending balance of retained earnings. So if you remember from your chapter, the report form balance sheet lists assets and then liabilities underneath them, and then stockholders' equity. So everything in the balance sheet is vertical. And our heading would be Melanie O'Malley Dance Studio Company balance sheet. And remember, balance sheets are always as of one particular date. So August 31st, 2024. Now we are also going to be completing a classified balance sheet. So remember, when you have a classified balance sheet, you're going to separate your assets into current assets and then long-term assets, and the same for your liabilities. So as we go through our listing on our trial balance, we will be determining which of these assets and liabilities are current and which ones are long term. So we know that our cash is a current asset. So is our office supplies and our prepaid rent. So current assets are those that we expect to use or consume within the next year or the current operating cycle. So those three current assets, I have my spreadsheet totaling, and those are $19,300. The next asset we see listed is property, plant, and equipment, or just equipment. And equipment, if you remember, is a long-term asset. We don't expect to use the equipment in the next year or operating cycle. And then we need to subtract from our equipment our accumulated depreciation, which is given to us as $5,700. Now, I did not put a minus sign, but the spreadsheet is subtracting the accumulated depreciation on the equipment from the equipment, and that gives us total property, plant, and equipment of $43,300, which, when we add that to our total current assets, gives us total assets of $62,600. Now we're going to continue down our trial balance, and we see our first liability is accounts payable, and that would be a current liability. Salaries payable would also be, and so would unearned revenue. So remember, your current liabilities are the liabilities that you expect to pay with either a current asset or by creating another current liability. So the spreadsheet has added those three together, and we get total current liabilities of $9,900. The next account listed on the trial balance is a long-term liability, because they actually told us that in the problem, and it's a note payable. So we're going to include that amount. That will be our only long-term liability. And now we get, the spreadsheet has added the current liabilities and notes payable together for total liabilities of $15,300. Moving down the trial balance, we see that our common stock is $18,000, and that is stockholders' equity. And now we need to compute our retained earnings. So if you remember, retained earnings is going to be equal to the beginning retained earnings balance minus our dividends plus service revenue, and then minus all of our expenses. So I have the amount here. It will be equal to the beginning balance, and then that is all our revenue, expenses, and the very last one is the dividend. So when we add all of those, subtract all of them, we get that retained earnings is $29,300. And that gives us a total stockholders' equity of $47,300, and we add that to our total liabilities, and we get total liabilities and stockholders' equity of $62,600, and we see that that equals our total assets. So our balance sheet is in balance. The second part of the problem asks us to compute O'Malley's current ratio at August 31st, 2024. 1 year ago, the current ratio was 1.76, so indicate whether O'Malley's ability to pay current debts has improved, deteriorated, or remained the same. So to calculate the current ratio, we take our total current assets, which is $19,300, and then we divide that by our total current liabilities, which is $9,900. And we get, our spreadsheet has calculated that our new current ratio for this year is 1.95. So we can see that O'Malley's current ratio increased from 1 year ago, which is an improvement. And that is the conclusion of the demonstration for exercise 419.